All right, sprinters, welcome back. I've been getting all your questions about recession, about Bitcoin. Let's look at your portfolio. How can you protect your cash? How can you build your recession-proof portfolio? What's the right time? What's the right allocation? What's the overall distribution? Let's have a look at the market. Last days have been very emotional for most of us, right? And let's start with the most volatile of our assets, which is the only commodity that we own right now, Bitcoin. Bitcoin is creating a ton of emotions, but if you look at it from our plan was in 2022 and 23 to buy in this green zone and to hold it in this white zone and to sell here 2% every week. We are doing that. And so yes, the emotions, they come and go, but if you have a plan, our plan right now in this red zone is to sell 2% every week, and we stick to the plan. Is it easy? Nope, because it's highly emotional. Some people think that we will hit 150K or even 200K, and I'm okay with not hitting them. We're selling 2% every week, and we will collect the bulk of it between 80,000 and 120,000, and I'm fine with that. You can't time the market. I don't try to time the markets. Nobody can time the markets. What we are looking at is a twofold strategies. One is to own the 12 best companies that we can. And the other one is with 30% of the portfolio to protect our cash position and to protect the downside. How do we protect the downside? With conservative options that should create 8% annualized, but more importantly, protect our downside. Those 12 companies are Google, San Lorenzo, HG Capital, Harvia, Nubank, Topicus, Amazon, Lumine, Booking, Ferrari, GXO Logistics, and MasterCard. Today, I wrote a bigger piece on GXO Logistics and the thesis. There you will find it on our blog, The Investing Show. And I've shared also today more of my plans in the Sprint Club, specifically what to do today. So while we cannot time the markets, and we don't even try to time the markets, there's one thing that we look at, and that's the volatility index. When the volatility index, the VIX, is above 25%, that's actually when we buy more. And so I was looking at our current portfolio, and I was thinking which one to buy more of. There are a few opportunities right now in our portfolio, because frequently your best trading ideas are actually right now already in your portfolio. So Nubank, for example, I'm considering adding some Nubank because I expect it to grow from here 30% annualized. And it's growing fast in Brazil. It's adding Mexico. Mexico has hit some milestones. There's always the risk of Latin America currencies and macro economies to be rocky, but that's always the case in Latin America. So it's priced in, I would say. They're used to that. It's extremely profitable. It can add countries. It can add products. I did multiple videos on Nubank. The CEO, David, is doing all the right things. He has a great team. They're expanding. They're on a roll. I would also add some bookings if it dips, but it never dips properly. I expect bookings.com to grow 24%. It's dominating Europe, which is much more profitable than the US for many reasons that we discussed already. I expect it to grow 24%. It's a reliable, steady compounder. It's winning on all fronts. It's always green since we own it. We own it since 2 years. It's always green. Bookings and MasterCard, those two I never wake up thinking about them, never. And so they are definitely wonderful for the portfolio. San Lorenzo is different. San Lorenzo had a terrible year, very misunderstood, overlooked. And we went in with the CEO, Massimo Perotti. When he bought more, he doesn't have to buy, he owns enough. When he bought more, we bought more. HG Capital, wonderful capital allocator, probably the best PE company in Europe. Google is very much unloved. They don't get any credit. They're amazing at AI, they're amazing at everything, but they never get the credit. So great dip buying opportunity right now, guys. I think it will grow at 12%, and you can get it right now at a discount. Harvia, the absolute leader in saunas. I've written a bigger article today about Harvia. Wonderful. MasterCard, Amazon, Ferrari, Topicus, Lumen, GXO. These are all positions that I've been recalculating, watching if I want to add something. I'm fine with the portfolio as it is. The overall CAGR is 14.2%. That means if we apply the rule of 74, we will double the portfolio value every 5.7 years. That's good enough. So I'm adding a little bit to these positions this week. I'm watching one IPO specifically. This is something that you wouldn't do if you expect a recession, an imminent recession. But next week, actually, March 11th, we have an IPO that I'm really interested about. And the reason is the CEO, Frederick, he was the CEO of Lifco. He built Lifco into an amazing serial acquirer of industrials. And he learned a few things that he is now applying to his next company, which is Roco. Roco. I don't know how to pronounce them, but it will go public March 11 as Roco B. And I'm very interested in joining the first round of investors. In the Sprint Club, I've shared with you guys some interviews of the CEO. And I mean, Lifco is a great company. This one can be a Lifco from scratch. So personally, I have missed Constellation Software. This could be my chance to join the next success story of a serial acquirer from the beginning. So one thing is reinvesting into current positions. Look at your current positions. If you've done your homework and you've scored them properly, now you can just add to them. If they are high quality, they will rebound very fast. So for example, bookings.com. Yes, if there is a recession, but nobody knows when it starts and how long it lasts. Bookings has survived a few recessions. During the pandemics and recessions, of course, the price went down. Oh, let's actually look at booking chart. So what happened? Because, the consumer is traveling less during a recession. So, of course, if we look at the pandemic, it went down, of course. And during the great financial crisis, of course, it went down. But look at it overall. So since October 2022, it's just been very, very resilient. And if it dips, of course it can dip. Let's say we get a recession. I think it will be one of the first to rebound. You know why? Because here it will be acquiring competitors that go bust. They will go insolvent much faster than Booking, who is the market leader in Europe and one of the global leaders. So what can happen to Booking? A ton in the short term, but I think it will recover as it did recover. And remember, our portfolio is 10 years, 20 years duration. So we're not scared about short-term recessions that take maybe 2 years. So we look at structural topics that will rebound and companies that are strong enough, and qualitatively, they are such a high quality company and they have so much leeway and cash flow that they can buy their competitors as they go bust. So if you want the details about these things, join the Sprint Club at strategysprints.com. Second thing that we do, so 70% of our portfolio goes into those 12 companies. And I'm reviewing new companies all the time. These are the 12 best. I've reviewed probably 300 companies over the last years. Now, with 30% of the portfolio, we play conservative options. We go harder in with 70% and the duration of 24 days when the VIX is above 25. Yesterday, the VIX was at 26. We were harder in there. And when it's lower, we just go in with 10% of the portfolio and allow us more time to be right, 35 days to 45 days. We sell puts, which means we are not the gambler, we are the casino. Okay? You are not the gambler, so you don't own the risk of the underlying asset. You are the casino. What happens in the casino? Gambler come in, they put $200 onto something, they play a few rounds, they lose, they get drunk, they go home. And those $200 stay in the casino. So it's very boring making $200, $200, but it's reliable. It's a great business model. So we want to be the casino. How do we do that? We sell a put to the open. Most of the time, nothing happens and we collect the premium. Worst case, you get assigned and have to buy 100 shares of that company. That's why we select only high quality companies in the first place. So my recent puts and current puts have been on Google, on Amazon, on McDonald's. Very reliable, steady compounders that over time, over 35 days, usually just go slowly up or flat, right? So these are companies, specifically McDonald's, that are reliable compounders, especially if you go after earnings. You don't get a ton of surprises during the week. And so 35 days later, will they be up more than minus 5%? Yeah, probably yes. And so you collect the premium most of the time. And some critics said, but Simon, it's like collecting pennies in front of a steamroller. I agree with the pennies. It's just, you make $100, $200 here and there from those single positions. But I don't agree with the steamroller because here we go for conservative options. So both the timing, high VIX, and the selection of those companies, very conservative selection, reduce the risk. And now, yes, we are creating. We did in January, we did $600. And in February, we made almost $2,000 just by collecting the premium from the buyers who buy the sell, buy the put that we sold to open. So very boring, a few clicks on the side, and we collected $2,000 in a month. Now, as soon as we are doing this as a community, we're discussing in the Sprint Club how to optimize this, and some people have some superpowers in specific industries, and so we bring our superpowers together, and together we are even better. And but so far, our portfolio has made 10% in January, February versus the S&P, which was below 2%. So it's risk-adjusted return. It's small things, but they compound over time. 10% compounds. If you do 10% every month, it compounds, and we love compounding effects. So that's the recession-proof portfolio, or at least our plan to come out of the next recession whenever it happens. If it happens, the other side stronger, because we will have lost less value in our portfolio, we will have survived, and we have the cash position. Those 8% that we're doing from options, that will be the cash position to buy when in the recession people sell. So because we want to buy massively during the recession. And so right now we're preparing the cash positions by selling those conservative options, which will create 8% cash positions that we can deploy during the recession whenever it comes. We're waiting patiently for the recession to come so that we can shop. Hope you have a plan. If you don't have a plan, join us in the Sprint Club. Let's create a plan together with you. It's strategysprints.com. See you on the other side. Keep rolling.